Welcome to the weekly analysis for the 14th of May 2023, where I'll be taking a look at some of the major currency pairs. Okay, this is the EU. I'm Trader Benny, by the way. This is EU. Okay, and traders can clearly see on the daily time frame that there has been some strong pushes to the downside after this many days of sideways movement. Okay, we can see the dollar breaking out to the downside, and that is not surprising because there's been a growing interest in the dollar. So this move here is driven by momentum, and then traders can clearly see that there is a possibility of this move going all the way down to go short, right? Looking at this, traders are definitely going to be looking to sell this market down to this level, but I would like to see a bearish correction on the H4 time frame. I'd like to see a bearish correction here, after which I look to go short. And on the opposite side of things, I will be very hesitant to go long on this trade unless the market takes out this high. So I'm not going to be ever willing to buy this market unless this 1.1050 level is taken out, so I can look for a pullback and then I continue to buy. That is going to be assuming that this correction does not hold. If the correction does not hold here, then I would make sure that this level is taken out so that we can print a higher high that validates the continuation of the daily uptrend move. Otherwise, I'm going to go short on this market. Okay, so waiting for a bearish correction so that I can continue the sell on. Then the other currency pair I'll be looking at is the GBP USD. This is the daily time frame as well. It's a similar thing happening here. Here we have a rising wedge right here. You guys can see that there's a rising wedge here. I'll just change this color real quick. There is strength with the dollar, so you can see that this is indecision candle followed by an indecision candle followed by a trend bar followed by an exhaustion bar. These are all the signs, evident signs of a breakout, from this level. And then it's going to the downside, and as we know, the market has a high tendency of going all the way down to the base of the wedge. Okay, but it has to deal with a lot of resistance coming from this pivot point here. Okay, so market has to deal with the barrier here. So I want to milk the market all the way to this point. Then I see how the market reacts here. Then I decide to either go down with the market, or we probably have a range after which the market ultimately decides where to go to. But for now, we can clearly see that the dollar has a lot of momentum, which might eventually force this market to break out and then continue down to the downside. Traders have to also pay attention to the 200-day moving average to see how it reacts to the price as well. So that is it for the GBP USD. And moving on, this is the Australian dollar USD. Here we can see that the market has a nice wedge, and I do not expect this market to not see the opposite side of this wedge, of this range, I beg your pardon. Okay, so our traders should expect the market to move all the way down to this point. If this level gets broken, then we should expect a lot of movement to the downside. Okay, so traders want to see how the market reacts when it gets to this point. Okay, so it's either we stay in the range and then we come back up, or if the dollar continues to get the interest of people, we might see a lot of move to the downside, and eventually a breakout of this. Next one, I'll be looking at the US dollar Japanese yen. This is the daily time frame. Traders can see market goes up, comes down, stays in what looks like a flag triangle. Put the lines for traders to see. So the market is in a triangle here, and it is very likely that this is going to buy because of what's going on between US and Japan. The fundamentals, the interest rates, everything suggests that the best thing to do with the USD JPY is to buy. Okay, so traders are always looking for a dip so that they can get in on it. Traders are always looking for a dip so that they can get in on it. And here you have a nice dip. You have a nice dip. You have an indecision bar followed by a trend bar, all of which is coming from an important level. Okay, so I would go into this trade with my stops right below the indecision bar, hoping that the market will get to this level at roughly 1:1 target level, and then if this level gets taken out, which is expected, traders have to look at the trend channel line for a possible retraction. That is, traders have to see how the market will behave on the trend channel line. Okay, this is the trend line, this is the trend channel line. Okay, so if this gets broken, I'd like to see the market move all the way up to this point. And if this is taken away, then I'll move to the horizontal lines to see how the market reacts to this level. And of course, this should be a nice place where you can start to ease out of the trade. Okay, another one would be the Euro GBP. The Euro GBP this is the daily time frame. The market is in a range which is tilted downwards. I just put in the lines there so the traders can see. It's tilted downwards, so traders can see that there is a downward channel on this. And if you observe the trend channel line on the opposite side, can see that the market is right there at the trend channel line. Okay, so what traders like to do is to expect that since we have an indecision bar followed by a trend bar followed by a rejection bar, this is a doji. Okay, so I like to see the doji taken out. Okay, so there is a high chance that the market could be pushing to test the opposite side, which is the trend line. Okay, so the market is likely going to move all the way. This is the daily time frame, by the way. So traders have to look for a correction in the H4 time frame or in the H1 time frame. So they want to see a bullish correction here. Alright, so traders would like to see a bullish correction on the H1 time frame so that they can join this move to the upside. Okay. The other currency pair that I will be looking at is the USD CHF. Okay, so here we can see this is the daily time frame. Market is moving down, but traders can clearly see that the market is bottoming right here. Okay, so you can see that the market is struggling to go below this level. First attempt, second attempt, third attempt. It's failing now, it's pushing up, but we have to first see that this level right here is taken out so that traders can expect a move to the upside. If I dial down to the H4 time frame, you can clearly see that the downtrend has been taken out. Downtrend is taken out, and traders are hoping that, you know, this range will eventually turn into an uptrend. Okay, so what I want to see on this market is a break of this range, right? If I get a break of this range, then I will trade a breakout all the way to this point, okay, for a nice risk to reward trade. Okay, and of course capitalizing on the fact that the dollar is quite strong, this might be a feasible trade to take, but it would only make sense if this resistance is taken out. Okay, so traders can hope that the market will head up all the way to this level, with their stops, of course, below this point. Okay, so that'll be all for this week. These are levels that I will be looking at. I'm going to be setting my alarms on these levels so that I can join in on some of the trades. I would most likely join the USD JPY from the Asian session with my stops beneath this level. Okay, and then I would look to trade the London break to join most of the other dollar pairs. Okay, thank you guys for listening. Thank you for your time. I really hope that you enjoyed the analysis. Please let me know what you think in the comments below. Thank you for watching. Do have a great week and successful trading week.